Hello, fellow traders. 'Tis I, the Rumpled One. It is Sunday, June the 3rd, the year 2018. Let's talk trading. Weekly open-end gap. Let's get right to it. But first, of course, money and risk management. We're starting the month off here. This is the second trading day of the month. So make sure you have good money and risk management. We can take a look here, and we can see that the yen has opened to the downside. Most of the gaps have filled, but we still have some healthy gaps here. A couple New Zealand pairs. We got the Beast, we got the Euro, and a couple other yen pairs here. So look for those gaps to be filled. You can see this huge tail on the week. This is going to be interesting. Talk about escaping the wick zone. That's going to be really interesting. But let's look at something else here. Let's maybe even start looking at the monthly chart. We're going to beat a dead horse here. So we've got the previous months, the 5 lines, the high, the mid, the open, the close, and the low. And all we have to do is trade on these line crosses here. Okay, so you can see here, it tried to get in and break out of the body, and the downside went in a wick zone, came out the other way. Now we're in the upper wick zone for the month. And you can see here, there's the previous midpoint right there at the mid dots, and we're below it. So there's going to be some action around this midpoint. It's either going to hit it and go, or it's going to hit it and come back. Those are the only two choices, up and down, right? Because it's not just going to go horizontal, right? So that's a place, this 109.74, call it 109.75 psychological trade on the dollar yen is definitely going to be in play. So just something to focus on there. And as you guys know, I pretty much just keep doing the same thing over and over, looking at the same pair. I've got other pairs on the dashboard, and yeah, if I see, really good opportunities, I will trade them. But for the most part, day in, day out, it's just dollar yen. I know how it moves. I can anticipate. Very disciplined. I know the statistics. There's just a lot to be had there. And we can look at the daily. As you can see, it tried to get in the wick zone, but it hasn't. So we're still in the previous session's body right there. And we'll just see what happens as the day progresses. Let's see, we're in the second hour of trading, I think. Yeah, okay, maybe the third hour of trading for the day. Not much on the range, usually not on Sundays. We can see here we had a buy zone trigger, and there really wasn't too much happening there. But if you took that trade, you probably should have scratched it by now, or maybe right there, taking a small, just basically a scratch. It hasn't hit your stop, but when it comes back down, just scratch it. It's just that simple. Once again, early in the day, there is no rat zone. You can see here, 1, 2, 3. Just in the third hour, it hasn't not enough movement for a rat zone trade. And looking at the pivot, you can see here's the pivot, and we know how the yen likes to go to the pivot. So you can see here we're still above that open. So if anything, I'd shoot fading that pivot right here. Maybe next hour. There's no rush. We just crossed below the 109.50 psychological. So once again, I think, I'm really tempted just to put that trade on just for the heck of it. Should I? Now let's just wait a bit. See, that's one of the things. You have to have a plan. You got to stick with the plan. You don't want to do that seat of the pants trading. You really, really, really do not want to do that. No, you want to have a plan, and you want to stick with it. Otherwise, you're gambling. You have a plan, and your plan should have positive expectation, then you're trading. So let's trade, let's not gamble. So you can see here, we're right around that 50. We'll be right at the line. So if we get this above the line, then maybe on a push, maybe the next hour, we can get that push down, and there we go. 5 lines, the previous 5 lines for the day, you can see it right here. We haven't quite filled that gap, so we don't have a trade off of there yet. The wick zone, haven't entered the wick zone. Now, holo zone, as you can see here, there was the open. It tried to fill the gap, not quite. And there's the highest open. And you can see there was the highest open, and it's down a few pips. Just looking at the tick chart, you can see here the ask fell below the valley, and that's pretty much what we have here until the bid right here crossed above the valley of the ask, and you can see it crossed above again, and there you have it. And I'm thinking I might just take this chart off, just to spread dots line chart. We can get rid of that. Really doesn't add much. It's just a different view. We've got the IRB bars here, and there's right here we had there was the long trigger right there, and it was only worth a couple of pips, so that would have been a scratch trade, right? And we've got the missed pivot. There it is. I really like, trading the pivots on the yen. You see there's a couple up here, there's a couple down here, but all the rest of them are hit. So, and remember, when you're fading the pivot, it doesn't have to actually hit the pivot to make money. So for example, right here, let's see, that one didn't fade at all. Where was that one I just saw? I expanded the chart. Right here, you can see there was a move to the pivot and money to be made. Right here, a move to the pivot. So there was, he probably scratched a trade or maybe just made a couple little pips. But that's how it works sometimes. And this is just my trading screen, or one of them that I like to use when I'm actually trading. When I get into it, because you can see here I've got 2 pips spacing. It's mainly I'm looking to do some scalping off of it. In fact, I have a new indicator. I don't know. I guess I haven't put it on this screen yet. We'll wait for tomorrow. Give you guys something to look forward to. A little tease there, okay? So here we go, back to the monthly chart. Once again, if you're not plotting your trades, planning your trades before you actually start to trade, then you're not trading, you're gambling. There's these levels you should know. So you should look at this chart and decide which way you want to trade, or know these levels. So when price gets to these levels, you can go, hey, you can put them load them up in an indicator or turn an alert on. I don't know. I can't remember if my HL5 is set up for alerts or not. Personally, I don't like alerts because once they turn them on, it's just a bunch of noise. So, no, this one's not set up for alerts. There are other indicators I've written that are set up for alerts. Somebody wanted me to put an alert on something the other day. I can't even remember what it was. And then here we go, just the Einstein lines. When I turn the computer on, that's where price was. You can see it almost crossed over, but you see it crossed over here. And so a short at the 50 would be worth all of about a couple of points at the moment. So you can see here, from when I looked, price is down. Pretty simple. So, that's it. There will be some more of the why you're not getting better at trading. I have a few more topics to add. It just seems like every day I think I'm going to be wrapping it up in a day or two, but then I find another topic to throw into the mix. Hopefully, at least a couple people said they've been enjoying that series. I guess I've helped them. They can hear themselves or see themselves when I talk about those mistakes that they're making. About the different things about the practice and just the focus and you know new indicators. Even though I just wrote a new one, but it's something I see. Um, I think I can give you just a slight hint. Um, Whenever there's a bar that's where the body is huge, what price tends to do is come back the other way to recover it. So, for example, you see this big bar here, price went down. You see how price turned around and came up, and right here, see this big bar here, and then price came around. You see this another one, and it's really not that big of a bar. We're looking at the the 1 minute chart, and it's only about 2 pips. But you know, if you're doing $100 a pip trade and you scrape it for a couple of pips, you just put 200 in your pocket. Or if you're just trading, $10 a pip, or if you got a small account, if you have a little $100 account, a $200 account, and if you're trading $1 a pip, you just may have made like 1% or 2% on your account. So it's one of those things, you don't push it. You have to really wait for your opportunities, but it can be made. Definitely can be made. And actually, where's the other one? Oh, I guess it's not here. So as you can see like this big bar here, this big bar here, you see how it might take it a few minutes, but you see how it recovered, and you see this one here, you see how price came back and covered it. That's what I'm looking for. And so when I kept seeing this over and over. So what I did was I wrote an indicator that basically will paint bars depending on how many pips you want it to look for. And it's not the whole bar, it's the body. I found that the body, for some reason, that's just what I see, and it just seems to work. And you can see it again right here, live, no hairy hindsight. You can call these hairy hindsights, but I talked about it. You see here, price in the past few minutes did this, and now it's come back. And you see how it came back, and then all of a sudden, boom, it stalled. Well, that's telling you something. So I hope those things help. And if anything, look at the monthly chart, learn those levels, and then do the same thing for the weekly chart and see if that'll help when you trade. So when you just before you're getting ready to pull that trigger, make sure you know where price is. So the most important thing to know is it's not what you trade, it's how you trade it. The Rumpled One signing off to drain the banks.